All right, friends, I am the messenger today. You know what happens to messengers quite often? Go ahead. Blame me. I wore a green shirt, trying to get a green candle. Got nothing of the sort. All right, let's take a look here. So I'm going to get myself out of the way. Derrick Evans here, NMLS 155010. Call, text, you want to buy a refi. Submit your scenario. I'll put that graphic up in a bit. You can email me anytime you want to find out what rates are for you, your situation, etc. That's what I'm here for. Don't want to see you get ripped off. A lot of people getting ripped off out there. I'm going to show you a couple things today. Give me some interesting stuff. All right, so this is mortgage bond chart. Today it's not pretty. We lost 73 basis points today. We've had worse days in recent history. Remember this day over here? When the Fed nuked it. We got the Fed this week. We got the Fed on Wednesday. So we'll see what's going on. I did include a link, and I'll put this in there. Everything the Federal Reserve is expected to do at its meeting this week. And expectations may be met or they may not be. That can cause fluctuations in the market, so we'll see what happens there. But as of right now, we just have a really awful day. Just a really awful day. And look at this new trend line. And this is what I've been worried about. Honestly, it's like, okay, at some point, we've got to start a pretty ugly downtrend, right? I mean, we've been in one for a long time. If we zoom this thing out, let's go back a year. Now you can see, like, we traveled along, the averages here, and you can see that. And then at a certain point, we got very bearish here, and we returned back to the averages, and then just sunk since then. Remember, we want to see mortgage bond prices go higher. That means lower rates. And right now, they've been going lower. And this particular decline that we're in right now is extremely steep and worrisome, frankly. It's worrisome. Because I think the only real danger to the real estate market is if we have rates go up too much too quickly, and then we see some sort of surge in demand in inventory. I don't know where that's going to come from. If people are just going to all of a sudden decide to sell their homes, who didn't want to sell their homes the past couple of years, hey, okay, finally now's the time. I don't know. I don't know where it would come from. But those are the concerns. So we don't want to see this. And here today we got a major gap. So we closed on Friday up here. We opened today here and then closed here. That's a big gap right there from there to there. So a huge gap here. Those gaps tend to get filled. So I'm hoping that we get some sort of return to that. But I promise you this, if we do return back up to this former support level here, very likely that we're going to bounce off and continue to go lower from there. Rates going to continue to go higher. This is going to go on for some time. And it's just a very curious thing to see where we're going to get to. So let's pull up some rates. We're going to look at some rates today. I'm going to show you some things. I also want to do a little buyer beware because there's a lot of false advertising when it comes to mortgages. There just is. There's a lot of false advertising. Even the advertising that's legit, which is what I'm going to show you. Legit advertising still has a lot of questionable tactics. So we're going to look at that stuff. We're going to start with VA. You guys know I'm a VA home loan specialist. We do all kinds of loans. I love working with veterans and helping make sure they get a great deal. Big passion of mine. We're going to do purchases. So the consistency here is 780 credit purchase transactions with minimum down payments. So that's what we do. We'll look at high balance, which is anything right now over 647,200. So loan amount over 647,200. And then we also look at conforming balance, which is anything under 647,200, and the rates are different in those cases. So let's take a look here for VA. We're going to go start off on high balance. High balance VA. I have a feeling I know where this is. Yeah, 3.75 United Wholesale. And look at that. Really no room. $587 lender credit, which isn't too shabby. So 375, guys. 3.75 high balance. It's just wild. This was 3%, a week ago. It's just so much movement. All right, now let's do conforming balance. VA. So conforming balance VA. And these are all rates with no points and no fees. We do not charge any points or lender fees. Okay, so see CMG here's got a 3.625 with a pretty fat lender credit. Let's take a closer look at that. Okay, so it shows up as 3.625. Really 3.5 costs you $98. Okay, you're not paying a lender fee here. So, you know, the $98 is no big deal, right, to get a whole eighth of a point less. So I'm going to call this 3.5. So right now for VA, we're going to say 3.5 conforming and 3.75 high balance. That's what we're looking at for VA as of today after a terrible, terrible day. A terrible day, but this is where we are, okay? It's not where I want to be. It's just where we are, so it is what it is. And if you would like specific information on your own scenario, submit your scenario. You can email me, text me. All I need is your loan amount, the value of the home, or the purchase price, either one if you're purchasing, credit score, and then whether it's a condo or detached. You can submit your scenario via email or text, and I will send you a custom quote. Let's go to FHA. I've been tracking FHA and VA to kind of see they're usually pretty close. Let's check FHA here. 780. Okay. Conforming balance first. So we know that for VA, this was just 3.5%. Looks like we're going to get pretty much the same thing here. Yeah, very similar situation where the 3.5 costs $140, but that's going to be well worth it. What's nice and interesting here on these conforming balance, both VA and FHA, and I should have pointed this out more on the VA, is that you can go up in rate. Look at this. So 3.5% gets you, hold on, let me make this bigger. So 3.5% costs you $141. But look at this. If you go up and you take a 3.75, they're giving you 11.4. 11.4. 11,400 to go towards closing costs. That's huge. Very rarely can you just go up only 0.25% and go from, you know, paying a little bit for your rate to getting your entire closing costs paid for and then some. I mean, that is just very strange right there. That is something that you could exploit in the market for sure. I can show you how to do the math on that and see if it makes sense or not. But since I zoomed in, it's getting a little weird here on my screen. Okay. Now we're going to go to high balance, FHA. What we've learned so far is VA is at 3.5 on the conforming side, 3.75 high balance. Really the same thing on the conforming balance for FHA. Now let's check out the high balance. Okay, so 18, and then having 45, so 22.5, so 877.5. I should really plan out these loan amounts so I don't have to do all this math. 27 instead of 22. Okay, oops. Invariably, I screw it up. It's amazing how often I can't do this for whatever reason. Okay, maybe it's 867.500. Goodness gracious. I'm going to just give in here. What is it supposed to be? 868,500. Don't get good at mental math, kids. Get good at using a calculator. Okay. So it looks good, good. Let's go. This is high balance FHA. These are live rates across dozens of banks. We want to see who's got the best deal. Flagstar Wholesale in the house. 3.625. That's better. So FHA high balance actually tracking better than VA right now a little bit. Obviously the VA loan is dramatically better product, but not everyone can use a VA loan. So we got to keep that in mind. All right, we're going to jump over to conventionals here. And while I'm running that real quick, you can submit your scenario very easily by email or text. Just need 4 pieces of information. I can pull up the information for you, give you your custom rate quote. And if you're guessing a little bit, let's say on your credit score, that's okay. We can always adjust it once you know exactly what your credit score is. But if you just want to get an idea of where things are and how things look, it's a great way to go. And it is better to get these customized. I know not everyone has exactly 780 credit as well, but it just kind of shows you the trends. And that's what we're really trying to track here, is the trends. How are the trends moving with rates, particularly when it comes to in lockstep with the bond market? That's really what we're trying to track here. And you can kind of see as the bond market decreases, rates increase, and that's how it should work. Loan Depot Wholesale, where are you at? 4.625. So we started off high balance here. High balance conventional, 4.625. Get a little lender credit there, 1180. Let's take out the tax service fees, about $1,100. 4.625 on the high balance. Man, I know I quoted that this morning, and it was 4.5. So there's that. All right, now let's do conforming balance conventional. The whole purpose of this. Oh, sorry guys. One man show here. The whole purpose of this is just transparency. So the idea is I think it's very, very lame that for forever, if someone wanted to get a rate, you have to kind of call someone and, they have to tell you, and they're this gatekeeper of this information. And then if you try to go online and look at stuff, which we're going to do here in a second, I'm going to shop with you online, and we're going to look at what you see, and I'm going to show you how to kind of read it. And I'm going to need to refresh it because I haven't looked at it since this morning, so the rates are probably different. Okay, so conforming balance, so under 647 to 100 for a conventional loan, 4.375 with a nice lender credit. Oh, nice lender credits across the board. I would probably go with Penny Mac on this. No offense to Florida Capital or Loan Depot. But yeah, you'd even go to 4.249 for $177. That's not looking too shabby right now. There's some interesting buy down and lender credit scenarios out there because the bond market is all out of whack. And so that's what's kind of providing that opportunity. Let's check jumbos also as well here. Just because, jumbo's typically higher rate than conventional. Right now, not the case. It's very, very interesting, or at least it hasn't been recently. Now we go ahead and put in conventional here, but then what we're going to do is we're going to say 1,400,000. Let's check out these jumbo rates. We're just doing 20% down, so we're all doing minimum down payment on these, every scenario. And let's see how this looks. When we checked this on Friday, it was at 4%. It was also JMAC. JMAC now 4.125. So look at that. So you have high balance, conventional, 4.625. Jumbo, though, well, that was 20% down. So it is, there's a different. It's a different loan, different backing, but 4.125. Small lender credit there. There's never really crazy lender credits available on jumbo. Sometimes the buy downs will make sense, This 4% looks like it can make some sense. Maybe 3.875 can make some sense. Starts to get a little too far out there for me after that. But there's a very simple, jumbo rate sheet right there. Not too shabby. Let's see here. What are we going to look at next? Okay, so we went through the bond market. Okay, here's where we go. So I want to show you this. I need to refresh this. So just type in today's mortgage rates or something like that in Google, which is what I did. And then I just went okay, well, how would I look at this? What's how do I pull these rates up? So okay, well, let's just do a high balance purchase, 5% down, and so this credit score here. See, a lot of times, so when I first came to the site earlier, this 15-year fixed was automatically clicked. And I have nothing against this website, by the way. They're it's a lead aggregator, but they had that 15-year automatically clicked. And so when I got here and I saw 3%, I was like, whoa. Then you have to kind of read the fine print, right? And that's the thing you have to do with these sites when you're shopping for rates. So there's a 15-year fixed. Here, let me zoom this in. It says 15-year fixed. Oh, also 1.6 points. Oh, so this isn't my closing cost. This is actually my points cost. And then there's an origination fee as well. So that you can kind of see that's the direction of it. So I had to go in here and unclick this 15-year fixed to pull this up. And a couple of these first two were pretty in line with what our rates were. Really close enough to say it's apples to apples. And but when I looked at the APR, our APR was a lot lower. So I'm like, I feel like there's something hidden here that we don't know about. And that's what the whole point of the APR is. But there are points being charged here. So this is 15,000 or 14,300 points. This is 15,200 in points. So that's the thing that is kind of, I don't know, it's here, it's there, right? But most people are just going to look here and go, oh, well, this is the lowest rate, so call them. But you got to look at the other things too. You got to look at the whole circumstance. So when you're looking at these things, when you see your friends looking at these things, I want you to point it out to them, show it to them, say, hey, what was the term on that loan? How many points were there? Were there lender fees involved as well? Most people probably won't look at this. And so, when you look at these rates, it's always very reassuring for me to go here and see these rates and look at my rates and know that, I beat everyone on here except for two people who I'm basically neck and neck with. And I still feel like my APR is lower on my quote, so something is amiss here. What is it? What are we missing? Why is your APR so high? And so I feel like I have the best deal of any of these, and that's why I'm obviously promoting that. If you would like to get a custom quote, just submit your scenario. Very easy to do. Email or text me. Loan amount, purchase price, home value, credit score, whether it's condo or detached, and I can get that for you. No problem. And then we're going to just look over here. I'm going to show you a couple things that I'm looking at. So today, well, let's just look stock market first. All right. So the Dow actually finished up flat today, up a buck or 1 point. Not much. S&P's down. NASDAQ's down. So my short on the NASDAQ did really well today. It's been doing really well. We've been tracking that the whole time. Short on oil did extremely well today. Boy, we got in at just the right time on that one, didn't we? The oil tumble has been very good to me. And we just expected that, when oil prices spike up like that, because of the high amount of speculation in the futures markets, you're going to see that happen. Gold trailed off a little bit today. What is interesting to me is that crypto seems to be holding up pretty well. I would have expected kind of a capitulation event now, probably into the low 30s, maybe even the high 20s for Bitcoin. Hasn't happened yet. Could still happen. But we've got a lot of things going on here geopolitically. And we've got things going on with the Fed. So Russia's economy is getting smoked, guys. And I don't know. Sanctions, you feel like, okay, well, sanctions are a nonviolent way to punish someone. But it's also if you went and you just took a man's wallet out of his back pocket, yeah, that's not very violent. But do you not expect violence coming back at you? Do you know what I mean? So I'm concerned about some of that stuff. U.S. holds very intense 7-hour talk with China. There's some really interesting notes in here. All the public information that's been disseminated is in here. I highly suggest you read this stuff. Know what's going on. It's hard to believe anything in the media, but when you hear from the horse's mouth, I take that stuff. I don't like to hear, our private sources or our inside sources or whatever, a source, that can't be named. That kind of stuff is garbage. But when you have an actual representative saying, here's the talks, here's what's said, here's what's going on, it's worth paying attention to. Also, Federal Reserve, the last update, these officials projected inflation would run at 2.7%. Okay, that's what these geniuses said, 2.7%. It's been much higher than that, almost 8%, which is scary, and that's just the number they're telling us. It's much worse. It's at least double that, probably triple that. So the Federal Reserve is in a corner. We've talked about this a number of times. Inflation is bad for bonds. You can see that in the chart. it makes sense to, hey, increasing yields. I think did I put that up here? No, I didn't. Increasing yields, go away, is something that is just a next step when inflation comes around. Like that's just the next step is yields go up, aka rates go up. And that's exactly what we're seeing. In fact, I think the 10-year hit a 3-year high today. So that was what's going on there. Also, I did want to put this one in there because I think it's worth reading. We've talked a lot about investing in the metaverse. I've talked a lot about how I'm scaling into a pretty big Facebook position. Even though Facebook annoys me, Facebook won't even let me run any ads on their platform, which is hysterical. Why am I investing in such a company? It's because they own the metaverse. It's a pure play. It's theirs. It's Facebook's. They changed their name to Meta for a reason, because they know where their future is. It's in the metaverse. And the metaverse and what's going on with metaverse gaming, the stuff that's happening there is so, so big. It's going to be, 10 years from now, people's going to be like, oh yeah. Now, I can tell you this. I'm going to be the old crotchety man who's like, I've never been to the metaverse. I've never seen it. And I'm not even going to know what I'm talking about. It's just not my thing. But I sure as heck am going to make money on it because it's obvious. Just like we bought oil when Biden was confirmed as president. We bought oil there and rode it all the way up to the 90s because it's obvious. Not because I like it, not because I'm happy about it, because it's obvious. Metaverse, same thing. And when you see some of the stuff that's happening with the metaverse, I would follow it and just know, look, you can buy the Facebook stock. Facebook stock is probably going to go down further. That's why I'm scaling into a position. I'm buying a little bit, dollar cost averaging in. We don't know where the bottom is in stocks. Keep hearing people calling for bottoms in stocks. We keep not seeing it. So a lot of these technical guys are telling you, stocks could bounce here. I look at the stock chart and it looks terrible to me. It looks terrible. It looks like it's going to fall. It looks like it's already off the cliff and in free fall. That's what it looks like. That said, if enough people see that and believe that, it could turn around. So we'll see. But as the outlook for mortgage rates right now is no bueno. Rates going up. Lock as soon as you can. So that's all I have to say. Lock your rate as soon as you possibly can. And if you want to get a quote, custom quote just for you, I can do that. Real easy stuff. Email, text me, loan amount, purchase price, home value, credit score, whether it's condo, detached, and I got you. All right? Hopefully that's helpful, guys. I will see you again soon. Have a great day.